is always my favorite one to talk about because we've got the market action stats from the month of November. So we get to do a more focused look on what's happening here in the Portland area and more real-time measures. So we're going to jump into that. This whole discussion is going to be like always. We're going to be talking about supply and demand, right? So within that, we're going to take apart those two components, right? How's the overall supply? Yes, inventory of homes looking like? What's the demand looking like? We're going to talk about kind of what I would sort of call the math, right? What's the money side? What's happening to people's equities? And then there are some great insights for next year and even the year after that. And as your teaser, we're going to save those for dead last. But one of them is going to be my favorite one to talk about because I think it's pretty meaningful. So that said, let's just jump right in with kind of that usual. Hey Jeff, how's the market? Well, here you go. The lockbox activity for the week. So this is every time Jeannie and I show a house, we open the door, this registers the lockbox hit. We had a big sharp decline last week. It's on a week over week basis. And I had predicted, hey, it's the Christmas slide. Here we go. And no, now we're back to the Christmas bounce. So we were down roughly 30%. Now we're back up 33% almost. So if you can look back to same time last year, we're above pace for last year in terms of showings. Bottom line, that the market is staying super active in the Portland area. Let me do a quick dive in. If you're watching this live, if you've got questions, comments, things you want me to talk about, whatever, put them in the comments. I'll see them on my side. I'll do my best to talk about them. Even if you just want to heckle me, go for it. All right. On the Washington side, I think the same bounce percent. They had also taken a pretty sharp drop last week. So definitely a pickup. They're roughly on pace for where they were last year. So the Vancouver side, it's equally just as healthy. And this is our new COVID market. So they're, instead of the winter lull and things slowing off and dying, I think we're just going to cruise right through December. I don't know that we're going to see much of a winter break. We're going to see arguably a little bit of a slowdown for sure. But all that said, it's still going to remain very, very strong and healthy here. So let's just kind of jump right in and let's talk about the overall stats from the month of November. These stats came out, and if those of you who get our monthly newsletter, you're going to see this the same theme popping up. The highs are getting higher and the lows are getting lower. So the price in the Portland metro area is now $521,200, which is absolute craziness. But so we're up about a tenth of a last month. So call it flat. Why not? But 13% year over year growth on home values. And again, this is supply. This is demand. Here we are. So we're gonna dive into all this. The days on the market, it slowed down a little bit in November. Not too surprising. Once you start factoring in, you've got a major holiday thrown in November. People did take a little break for November. Whereas October was about 38 days for your average home sitting on the market. You're 41 days for November. But compare that to a year ago, 60 days. So we're down significantly. The market, it just means the market is moving. Closed sales, 2,745 closed transactions during the month of November. It is down 13% from October. October was an absolute monster of a month. So we are down, not surprised, right? It is technically winter, so you would expect this to slow down. But again, that said, 25% increase over last year. So that is dramatic. So the demand is sky high, but the supply. Last month and the month before that, we had talked about absolute record low inventory for the Portland metro area. It had never been lower than 1.1 months in recorded history, which is like 1999 when the MLS started tracking this. We're now at 1.0 months. So what this means is at the current pace of sales, if nobody else listed a house for sale in Portland, all Portland metro area homes would be sold within 30 days. So just let that sink in. There are no homes out there for sale. There are, but it's just there's not nearly enough. So thus you're seeing the dramatic price increases. But we're going to talk about it a little bit later on. The first question I always get is, how is this not a bubble again? How is this not like 2005, 2006, the kind of that big run up followed by the Great Recession? We're going to talk about that because I think this is truly different. And that said, let's compare this to last year. Our current 1 month of inventory, it was 2.5 months, 2.4 same time last year. So it's crazy. So let's look at that a little bit more. Here's the MLS does a great job giving us a little summary table where we can look back month by month for a few years at a time. So if you just want to scroll back, we had March of 2018 at 1.6 months. It's kind of close, but really not really. This is unprecedented. We just have not seen this in quite some time. So I know the first question people are going to say is, okay, but Jeff, there's a big run up during kind of the 04, 05, 06 timeframe before that bubble burst. So that probably look very similar, right? So let's put that in context. Here is your inventory for back to your 04 to 06 kind of a time frame. No, it wasn't there. Now you can see the slowing happening at the latter part of 06, right? 4.5 months, 5 months. I think it got to 7 or 8 months, which was awful. But if you look back, sort of, it's still in those peak times. It was 2.5 months. It was 1.5 at the low point. There were still homes for sale, at least more than there are now. So it's different. What's driving a lot of our skyrocketing prices right now is just a true lack of homes, right? And so in part, a little bit of construction, and we're going to talk about that. It's going to be some people sitting on the sidelines because with COVID going on, the pandemic, they don't want a bunch of people walking through their house. They're afraid to show their homes. They're not going to be comfortable with it. That will thaw next year as we're getting the vaccines rolling out. Or at least I would expect to see it start to thaw next year. May not be a full run rate thaw until the year following, but it'll get better for sure. The flip side of that is how many buyers don't want to go out looking at homes because they don't want to walk through somebody else's COVID-infested house. So how many more buyers are also going to come out of the woodworks once they are vaccinated and they feel safe and this whole thing is kind of back under control? Don't know. That's sort of your read the tea leaves. Who knows what we're going to get next year, but I think it's going to be crazy. And again, this is going to be talked about the very last slide in this deck. We're going to talk about the next couple of years. So again, just a quick interruption. If you're watching this live, put them in the comments. I'll see them. I'll do my best for you here. So we're talking about the overall supply. So here we go. Your total active listings. This looks back this year versus 2 years. So I don't even have to talk about the slide. We're down on active listings, right? Not enough people are listing homes. Through the April timeframe, we were hanging in the prior years. It was not as good as 19. It was better than 18. Just a good following your basic trend lines. It's very nice. And then the pandemic hit, and homes were dropping off. Homes were selling. A lot of it was just people pulling their listings or pulling their idea of listing because they just don't want folks coming through. Then kind of couple that with rates and the sharp recovery we saw in the market. So your active listings are way, way down, but our pending sales, meaning homes going under contract, we are outperforming prior years. So again, let's talk about the supply side. Not enough people are listing the homes. More people are buying the homes. 1 month of inventory. So that's where that comes from. That's the effect of that here. So we kind of look at that just for sort of a few years looking back. So let's do this. Becomes a bit of an eye chart, but the blue bars are months of inventory. The kind of the orange line, that's your hockey stick there. That's your average selling price. The red line at the bottom, that's just sort of your baseline. So you can look backwards of that shows the 1 month of inventory we've got now with a line going backwards. So you can see how does this compare to every November going back to the year 2000. So to say that we are at record low inventories, this is absolutely crazy. Obviously the big spike in the middle, that's your Great Recession. So the prices tank, and then to say that we've recovered is an understatement. Prices are kind of through the roof. And then I'm going to show this one again because this is my favorite. This is my favorite slide here. Again, the blue bars are months of inventory. The orange is your average selling price, and I show that green band just to simply show that's what people would call it a balanced market. 4 to 6 months of inventory would be balanced, meaning it doesn't favor the buyers or the sellers. It's a level playing field. And outside of the Great Recession, we haven't really seen this since the early 2000s. So we're almost a decade removed from normalcy outside of a once in a lifetime phenomenon. So we are ridiculously low, and I just don't see this getting better anytime soon. And that part's coming. So let's take a quick dive then on the inventory, kind of the bottom 5, who's got the least inventory, and then the top 5, who's got the most inventory. So bottom 5, not too surprising, Beaverton, Aloha. There's nice affordability, a lot of ranch style homes. It's a super popular area. You get some Nike crowd picked up in there. They have basically 2 weeks of inventory. Tigard, Wilsonville, same thing, a little over 2 weeks. Southeast Portland, no big surprise, not quite a month. Gresham, Troutdale for sure is going to be driven from affordability. So your top 5 inventory, West Portland gets skewed with condos and whatnot, but and price point in some areas. North Portland 1.3, and they start getting more into just getting back to the statistical norm of close to 1 month. But those are sort of it's just your look at the top 5 and bottom 5. So if you're saying to yourself, now's the time, I'm going to go while things are nice and leisurely. I'm going to go pick up that awesome bungalow in Southeast Portland. Good luck. It's not quite 1 month of inventory. It's going to be competitive for sure, at least as it relates to the right house, the right area at the right price. And I would say the market is not neurotic. There are homes that look great, they're in great areas, priced okay, and they're sitting. So it's not a 3 sheets to the wind type of market. So it is kind of interesting to watch. There is still a lot of caution and hesitancy from buyers kind of going out there. So for what that's worth. So let's talk about then on the supply side. Let's talk about new construction starts. And this goes back to 1990, right? So we're going to do a 30-year look back on this. The blue bars is just the average monthly volume of new construction starts in the Portland and Vancouver metro areas, okay? So this goes fast forward all the way through to 2000. You see the big drop off in the middle. That's your Great Recession. That's when builders said, I'm exiting the business. I'm bankrupt. I'm going to stop. I'm going to pause. We're going to work through the surpluses of inventory that had been created. Okay, so within this, then I got 2 bars we want to talk about. The green line at the top, that is the average number of new construction starts from the 1990 to 2005 timeframe. Okay, so it just sort of shows you sort of on average where we're looking for that period of time, that 15-year look. Where were we averaging on new construction starts? The red line I've placed the show from 2015 through year-to-date 2020, the average monthly, right? So for the last 5 years, we're averaging where the red bar is. For 15 years before the Great Recession, we were averaging at the green bar. It's a 31% reduction in the number of new homes being built in the Portland, Vancouver metro areas. So there's your supply side. Now factor in the Great Recession in the middle of that big trough that got built in there. This is where we have not enough physical homes available for sale. So even when COVID goes away, mortgage rates normalize, all the tailwind activities stop, we still don't have enough homes. And this is true nationwide. This is a total country phenomenon that's happening right now. But certainly, all I really care about is what's happening in our backyard. So here you are. Our new construction starts are down by 1/3, which means, and they've been down by that level for a significant period of time. So if you want to really truly offset that, given a growing population, millennials are entering the market. We talked about that last week. You need probably at least a good 10-year of equal degree of over construction to offset that trough, and it's just not going to happen. There's no dirt available for sale to accommodate that. So there you go. Our supply is super high, or super low. Our demand is high. I don't see how the supply side gets better anytime soon. So let's talk about what else is kind of driving forces here within the market. Your net migration by state, right? So in Oregon, net migration is basically 32. So for every person that moves out of the state, 32 people move into the state. That was kind of an interesting look. We're certainly not the highest. Some areas, Idaho's doing better. Nevada's on fire. I don't know why, but hey, they're doing great, so good for them. But we're not a net exodus state, so there are still people moving in here, 32-to-1 kind of a ratio. So I want to look at what's our California's been in the news quite a bit, mostly San Francisco, kind of Bay Area. Sure, there's a big exodus. Everybody's leaving. Everyone's going to Colorado. Texas is picking up a lot from California, which whatever. So net migration is a negative 726. So for every person that moves into California, 726 are leaving. So I find that kind of interesting just for comparison to show it's not just the West Coast is being abandoned. California, for the price point, certainly is. So the next question then becomes, where are they going? There's 726 people leaving California. Where are they going? And here you go. You see it. Number 1, Texas, for some God unknown reason. Probably for the tech corridor. A lot of people want to get to Austin. Who knows? Nevada. Who knows? Number 3, Oregon. They're just coming up I-5. So you can hate seeing the license plates, but if you own a house, They're good for your equity value. If you're trying to buy a house, you can hate the license plates, I guess, but it's definitely definitely what we're seeing. So then overall, then on the right side of that is who's moving into the state. So for Oregon, who's primarily moving into Oregon? It's the Californians and Idaho and Washington. So it's our regional people. Strangely, number 4, Puerto Rico. I have no commentary there. I found it interesting. That's our 4th biggest migration. I have no idea what's driving that, but I'll take it. So basically, it's people Pacific Northwest. They don't want to leave, so they're just reshuffling. But they're going to go for the affordability. So if you think about that in perspective, California, major West Coast, there is no affordability there. You come to Portland, we're arguably a bargain. Certainly compared to the next coolest place on the West Coast would be Seattle. Still significantly more expensive. So we are a big hub. We're going to remain a big hub. So just look for that to continue. All right. So we've talked about the demand is high, the supply is low. People are coming to Oregon. People want to live here, and our prices are doing this. And again, that's a national phenomenon, right? So now you're starting to see stories like this. In the United States, $1 trillion of equity gained in the 3rd quarter alone. It's $1 trillion. That's everybody combined. So it's hard to really get your head around that. But the fact that people are putting out articles like this means this is a significant number, right? So it does for you then as your home values are growing, your equity is booming and going through the roof. And things like, I don't know, a global pandemic hits, maybe you get hours cut, maybe you lose your job, maybe whatever you've got going on. You've got that natural piggy bank of value within your home to say, I can just tap into that equity to draw some short-term cash to get through this situation. And I can do that without losing my house. So you've got a natural fallback there in place. So that's what's been helping a lot with the pandemic. Plus also, we've talked about demographically, it's more of the renter base that's been hit simply from the demographics of the job types that have been impacted by COVID most predominantly. So let's put that into a little bit more granularity though. Where on average, what's the equity gain year over year? When you look, so the red states are the big hotbed states. It looks like the low threshold here. Was Wyoming there at 24,000? That looks to be the lowest of the red booming states here on the West Coast. Portland missed it by $1,000. So I would put us red or at least pink. But the state of Oregon, if you own a home, on average, year over year, $23,000 of equity, which basically means if you go to sell your house, you've made $23,000 just from owning it. So that's a significant number, and it just shows that the West Coast continues to be on fire. Conversely, then let's look at as home values are exploding and going through the roof. How many people have basically negative equity within their homes, or what's the ratio, right, of homeowners that are essentially underwater? And it's not a big surprise with the West Coast, with our values booming the way they have been booming. For Oregon, 1.5% of homes have negative equity, so that's super low. There are some places in the Midwest, lose bigger. They're still hurting, and a lot of this can be just not enough, the supply, the demand, who wants to live there. But good news for us, 1.5%, super low. So again, I put this all together to argue we're not overinflated on our values. This is supply, demand. We got record low mortgage rates. And so I think I may have duplicated a slide here, but anyway, so they talk about kind of over the past year that the growth has recorded a record level of home equity growth for homeowners. And again, this provides that buffer for if you get into financial difficulties, you can tap into it, which is why you're not seeing record levels of foreclosures. So as people talk about, hey, as soon as the eviction and foreclosure moratoriums lift, the sky's falling, and it's just not. The home values have blown up so much. People are just absorbing this. Maybe they're taking on a little bit more debt, doing some equity pulls through HELOCs, whatever else, but they're able to weather these storms. And there's still positive equity ground. 1.5% in Oregon is nothing. So if you're trying to time for a collapse in the market to make your purchase, again, it's a losing bet. So I got 3 slides left. We're going to wrap this up here pretty quick. So what does this then mean for, what about next year? What about the next couple of years? Let's talk about that. We're going to talk about mortgage rates, where we think those are going, and the kind of market overall, right? So this story came out, Redfin CEO basically saying this booming COVID housing market, it can get even hotter. And I'm going to argue it can, simply because we're going to get vaccines, right? People who are not working are going to get back to work, and some portion of those are going to then say, I'm ready to buy a house. We've got 1 month of inventory in the Portland metro area, which means not everybody who wants a house is able to get a house, right? There is a lot of competition out there, and people are getting beat. There are stories regularly of double-digit number of offers on homes for some homes, certainly entry-level houses. So I think the demand is there. This is not a phenomenon kind of a thing. So I truly think this pretty much can and will get bigger. So Yoon here quoted in this article, he's the National Association of Realtor chief economist. And so they asked him, what do you think about next year? And he's saying home sales could be 20% higher in the third and fourth quarter of this year compared to last year. And he's saying 5 to 10% growth on top of that next year. So he's saying the same thing, right? He's saying this is just going to keep getting bigger. We've got job growth, we got mortgage rates, and he's saying, this rate's probably going to stay at roughly 3%. So the National Association of Realtors put out their overall forecast for next year and the year after. And this is, I think, is significant, right? So here's your consensus forecast of professionals all across the world, a lot smarter than I am. So 2020 now, what do you think for next year and for 2022? I've highlighted 2 boxes here in red. The 30-year mortgage rate, 2.83 on average this year. They're expected to average about 3% next year, 3.25% the year after that. So that quarter to half point increase you're seeing, not quite half, but increase on the rates between now and 2 years from now, it's going to cost you a little bit of money. It's more so going to be, it's still super cheap money to borrow. It's going to keep pushing that demand high. Those prices are going to go up. So then in the second box, what's your home price change? They're saying we should nationally going to end about 15.5% year-over-year growth this year. They're looking for growth of 8% on top of that next year, 5.5% the year after that. So bottom line, nationally speaking, this market's not cooling off for at least 2 years. Now take it hyper local. Let's go to Portland. We have 1 month of inventory. We've got the urban growth boundary. You can't steal dirt to build on it if you want to. You have areas who are looking at it outside of King City. I know Metro is looking at doing a large swath of development out there, and they want to make a big focus on affordable housing. Well, now imagine your surrounding homeowners who basically have said, I bought these $600,000, $700,000, $800,000 houses. I don't want affordable housing. It's not going to be good for my value. So they're going to bog down that process probably, right? So I don't see supply easing in the Portland area anytime soon. Mortgage rates are going to stay low. Your prices are going to keep going high. So bottom line, if you're looking to buy a house and you're frustrated by this market, keep at it. This is the absolute perfect time to be buying a house. If you're just getting started, holy cow, this is your dream scenario. You've got at least probably a 2-year, 3-year, 4-year runway where I think your prices are going to just keep climbing out of control. This is where you're going to build real wealth for you and your family through home ownership. That said, sometimes it takes creativity on your offers. There's a lot of moving pieces, and there's definitely ways you can get offers. One, just to make sure you're working with the right team of people. If you think about selling a house, again, it's a great time. It's not a neurotic market. You still absolutely have to price your house right. So there's no shooting for the moon. This isn't the one departure from the pre-Great Recession. Was back then it was throw a number on the wall and anybody will pay it. Now it's still being vetted pretty heavily. Prices obviously are going up, but you got to price it right. But homes are certainly moving. So there you go. Whew. 24 minutes. That's a long one. Sorry. I tried to rush. I know I'm talking too fast, but I knew I had tons to try to cover here. So that's your weekly update. If you have any questions at all on this, what for elaboration of anything, hey, put them in the comments. We'll see them real time. Otherwise, we hope you're doing well. Have a great week, and